Speaking of housing, how about this for an idea? If you have a second mortgage, just don't pay the thing if you can't afford your first one.
Rebel Cole is a finance and real estate professor at DePaul University, and that's the way he wants you to think. Why should someone not pay their mortgage, Rebel?
Well, let me make it clear what I'm talking about here. I'm not advocating that you not pay your first mortgage simply because the house is worth less than your mortgage. What I'm advocating is that if you have two mortgages and you have defaulted on your first mortgage, but your second mortgage you're still paying, you might want to consider defaulting on the second mortgage.
The problem with that, well, maybe let me ask you what the problem with that would be, is that anytime you say to someone, hey, listen, you signed a contract saying that this is your obligation. You've agreed to pay X amount per month. Now I'm telling you don't pay that amount per month. Isn't there no moral issues that come up when you're advising people to go down that road?
I'm approaching this as a business transaction. You have to deal with the morality of it on your own. But the simple fact is that most people who have a second mortgage but who are delinquent on their first ultimately are going to default on the second as well when their house goes to sheriff's sale and they lose it. So what they're doing is they're simply throwing good money after bad.
Right.
And worse yet is the incentive structure with the second lender. The incentive structure is that if you're paying your second mortgage, your second lender has no incentive to negotiate with you to restructure your first mortgage. And this has been the biggest problem that has held up the Home Affordable Mortgage Program, which was supposed to help 4 million borrowers, but has only helped about 500,000.
For lack of a better phrase, you're telling the borrower to play chicken with the bank and try and force the bank to renegotiate with you. But with these types of loans, don't the banks have recourse? They can come after your other assets. Won't they do that?
In some states they can. Typically they sell this off to a collection agency and they'll sell it for 10 to 15 cents on the dollar, but that's going to happen anyway. What I'm really saying here is, you know, if you're a borrower and you're in this situation, you really need to get a counselor or a lawyer to assess your particular situation. What my story is really about is the failure of bank regulators to force the big banks that own the majority of these second liens to write them down.
But how much of a difference would it really make? So the big banks like Bank of America, JP Morgan, understood, but how much of a difference would this really make? Are a lot of people in this situation?
I estimate that between 1 and 3 million delinquent borrowers are in this situation.
Well,
there are 2 million
other
people
numbers
in
out
the
there on that.
foreclosure
The
process.
controller of the currency says it's only like 200,000 or 230 some odd thousand that are in that situation. So where do you get the 1 to 3 million from?
Well, the control of the currency has a dog. It has a dog in the fight here. He's the one who's the primary regulator for these 3 banks, which, if you mark their assets and their loans to market, would most likely be insolvent. So they're trying to understate this problem. They didn't tell where they got those numbers from. I have no idea.
Well, with the way that many people in this country use second liens, they use them to go out and buy whether jet skis or renovate the kitchen. So, Rebel, how is your advice to the people who borrowed money this way any different than just telling all of America, hey, don't pay your credit card bill and just hope that the bank renegotiates with your sells off the debt at pennies on the dollar?
It's totally different. These are second mortgages. I'm talking about people who took out a second mortgage to buy a house. So, for example, when I bought a house, if I didn't want to put down 20%, I get a conforming 80% loan to value that gets sold off in the securitization market. And then I get a home equity line of credit for the remainder amount, 10 to 20%. So that's what I'm addressing. You know, people that took out loans to get jet skis or pools, that's a whole other issue.
All right, Rebel, thank you. It makes us think anyway. Thanks for coming on today. Rebel Cole with us here to start the show on Fox Biz. It's just like, I don't know, something about it makes me uncomfortable, but maybe that's just me. I mean, it's like you said, you're kind of telling people to not do something.
It should make you uncomfortable.
Well, you make me uncomfortable. That's totally different. I'm just saying in this case.
No, it should make you uncomfortable. That if you agree,
it's weird.
Yeah, you agree to make the payment, and then you just decide, I'm not going to make the payment.
Right, so I'm not crazy.
Well, you're crazy, but nevertheless.
Not